Real estate investors seeking long-term wealth accumulation often choose the buy and hold strategy, where they purchase properties to rent out, benefiting from both rental income and property appreciation over time. This approach requires managing properties and tenants, but promises stable cash flow. For those looking for quicker returns, the fix and flip strategy involves buying distressed properties, renovating them, and selling for a profit. This requires renovation skills and market savvy to ensure a profitable flip within a short period. Wholesaling is a strategy for those who prefer to play the middleman. Investors secure properties at a low price and assign the contract to another buyer for a fee, earning a profit without the need for ownership or renovation. Investors can also opt for short sales, purchasing properties from distressed sellers with lender approval. This strategy allows acquisition of properties at below market value, but involves complex negotiations and longer closing times. Vacation rentals offer the chance to own property in desirable locations, renting to short-term guests for income that often surpasses traditional rentals. This strategy requires managing bookings and maintenance, along with local regulations compliance. Investing in commercial real estate, such as office buildings or retail centers, can yield higher rental income and potential property appreciation. However, returns can be significantly impacted by market demand and economic conditions. For passive income, investors can buy shares in real estate investment trusts or REITs, which manage income-producing properties. This offers real estate exposure without direct ownership, though market fluctuations affect returns. Crowdfunding allows investors to pool funds for real estate projects with lower capital requirements. It's essential to perform due diligence on the platform and project details. Real estate development involves creating new properties, from residential subdivisions to commercial complexes, offering profit from sales or leases, but requiring significant investment and regulatory approvals. Syndication lets investors pool resources for larger projects, diversifying risk through shared ownership. Understanding partnership agreements and management structures is crucial. The tax lion strategy involves purchasing liens on properties with overdue taxes, earning interest or acquiring properties at a discount, though it comes with legal complexities. Finally, land banking involves buying undeveloped land in anticipation of future development, requiring patience and market analysis to identify areas with growth potential. Each real estate investment strategy comes with unique benefits and risks, and successful investors often combine strategies to align with their financial goals and market conditions. Thorough research and professional advice are key before committing to any investment approach.